Great. Okay. Let me know if you guys can see that. And by the way, if my mic cuts out, please someone just speak up, yeah? Because I'm using my inner headphones and it just randomly turns off for some reason. So I'll have to like reset it. Uh,
No, you're all good, man. I can see the screen.
okay, great. Right. So let's start with Bitcoin and this area here, right? So we were looking at this. Firstly, what was this area in terms of key levels? We have our, one sec, let me find it somewhere here. Yeah. I know this was previous all-time high, 68,997, right? This right here. So this weekly close was going to be an important one. And by that regard, the weekly close was actually amazing, right? That weekly candle is really, really good. And technically speaking, you did close above resistance, which is what you want to see. But in terms of now the local area where we closed, it wasn't a strong close. Okay, what I mean by that is overall the weekly candle was bullish. Yes, no one's going to deny that this was a very bullish candle. But locally speaking, now at the peak, even though we closed above 68,997, firstly, it wasn't a close done with chest, right? Let's say you sort of just kind of peaked above 68,997 and closed like that. This wasn't a decisive, yes, let's get above this level now. Like, let's just close way above. It wasn't anything like that. Nothing decisive you could look at and say, yes, buyers are showing immense strength coming into 68,997. We didn't have any of that, right? Firstly, so the weekly close, even though the actual weekly candle was bullish, the close itself could have been better, right? You compound that with the
Mm,
fact that we had this this supply line right over here. We have this peak. We have this second peak as well. So we have this triangle. If I go on the daily, it make it easier to see. We have this triangle here, which is basically acting as supply over time, right? We did SFP that and close below. So we did close below the supply line, not above. And this is taken from extremities, right? So we did close below that. So in terms of close, again, now there's another reason why this wasn't the strongest close, right? We also compound this with the fact that we have, where is it? Group 8. Let me find it. This area where we're, doing all of this is just above the 786 of this garden, right? So in terms of a W shape in this case, any weakness here is just like, any weakness here can then be taken by the sellers as saying we're validating a completed W shape, like a bearish harmonic, right? Not a bullish harmonic. And we know bearish harmonics have been outperforming because we know there was a shark over here when this dump happened, and then we know there was a shark over here as well when this dump happened, right? And then there was another completed M shape over here when this dump happened. Sorry, W shape. So every bearish harmonic on BTC has literally been hitting and hitting and hitting, right? So this is your fourth one, and for now you're getting a reaction off it too, right? So now, just simply in terms of your um, Japanese candlesticks, you can already see that buyers are struggling at this area, right? So now you can take this one step further, and I'm going to show you guys. I'm going to actually show you guys a perspective from order flow today, which is something I don't normally do, but just to show, like, what I mean when I say sellers are taking control or buyers are taking control. Right. So I'm going to open up the footprint chart for this particular area. Okay. So that's going to be right over here. Let's just. Right. I don't know why this is frozen. Let me reload it 1 second. Right. So if we go and we actually take a look at what was happening at this particular area when that peak came in, right? So we got the weekly close. What was happening in terms of buyer and seller activity, in terms of the actual executed trades, right? Let's take a look at that. So I'm going to zoom in over here. There we go. Let's zoom in here. Okay, so let's take a look. Our first peak, very much a buyer control candle, right? Very much a buyer control candle. We have huge positive delta coming in, right? During the breakout, the actual positive delta that led us above, we can see that, right? We closed above previous imbalances. Huge positive delta, meaning buy aggression coming in overall to take us higher. And no sign of bearishness here, no sign of bearishness here, right? And then we get this candle, which took us to the high we got to during this weekly close, 59,565, right? And what happens? You see immense buying aggression coming in right over here. The right hand side is the ask, i.e., aggressive buys, right? And the left hand side is the bid, the aggressive sells. And what we see is we see massive aggressive buys coming in, right? Compared to the aggressive sells, there is no aggressive sells going on at the top here. No one's bidding, right? There's no market shorts coming in. It's all market buys coming in. And where is it coming in? Literally at the peak, right? Your high volume node, your point of control for this candle basically is also massively on the side of the bulls, right? Look, 383 versus 41. Okay. So massively. So this is one of the imbalance, right? Imbalance on the ask side, meaning imbalance on the buyer side. There's huge buying volume compared to selling volume. But even amongst the face of all that, the overall candle, how did it close? You closed below all your buying imbalances. You closed below your high volume node, all in the face of, even though we know huge market orders are coming in, right? We have huge positive delta, but the candle body close is closing below all of your actual strength, signs of strength, right? Your imbalance, your high volume node is closing below. Meaning, if you think about this in terms of buyers versus sellers now, active market participants are jumping into the longs, right? But something is keeping us down. And what is that something? That is going to be your passive market participants. Meaning, even though people are market longing, the demand from those market longs is clearly not enough to absorb all of the limit sells that are here from passive shorts, right? This is a sign of absorption. And I did take a short here based on this, a scalp, but this is a sign of absorption, right? And then we go through, right? We go through and we get initiation, meaning, you get follow through from that. And then you get discount, right? Which really put the nail in the coffin because what we have now, overall, look at this, right? Delta is still positive. Green delta means overall there was more buyer activity there was more buyer aggression than seller aggression during this candle, right? There was more buyer aggression. So logically speaking, if you have more buyer aggression coming in, right, you want to see a green candle, right? If you're saying there's more buyers than sellers, the candle should be green. But what do we have here? We have a red candle, huge swing failure pattern, red candle, right? Again, all your buy side imbalances are at the top of the wick, meaning market longs are coming at the top. The high volume node is once again at the top, right? This 31 compared to the 8.4. Why I'm going sideways is because when we're talking active versus passive market participants, anytime someone is market long, you're taking liquidity from one trade below, right? So when you're looking at footprint charts, you don't look sideways, you look diagonally. So compare the 31 to the 8.4, right? Again, your high volume node is heavily buyer centric, right? Your buyer regression is there. Even amongst, again, the face of all these buyers, even amongst the face, even though you have positive delta, overall, you have a red candle, right? This is now what we call delta divergence, right? Even though we can see market orders, market participants are longing this, right? What we're saying is the passive sell wall, the limit sells in this area is just too much. There is too much supply. The market participants are not able to absorb all of that supply, right? And therefore, what we basically say here is, okay, these traders are now going to be trapped, right? And this is an example of trapped traders. Trapped traders is always a very, very important confluence to take into consideration, especially if you're thinking of trading range extremes, right? If you see trapped traders coming in, it's a very, very good confluence as to why you should counter trend what you think is currently happening. Huge sign of trapped traders across these two zones. And from there, you go your follow through to the downside, right? And from there, you go in, put another lower high in, and then, since yesterday, we've just been going down. So I've just been like, scalping, taking profit, scalping, sizing down on my scalp on this particular one. But this was sign now. This is why I'm saying the weekly close itself, the weekly candle was great, but the buyer slash seller activity that was occurring at the weekly close was not, right? Even though we had a really strong weekly candle, there was absorption going on at the top of this. So until I see some serious signs of absorption now to the downside, so let me just switch over to the 15 and then drag this to the right, which you haven't really seen yet. Um, the lower time frame trade now is locally to the downside, right? So we need to go up, take out the last lower high, put in a high low, so on and so forth, get that change of character break of structure in before we can really think about going much lower, going higher again now. I said the sellers have taken control since the absorption came in right over here. And by no means am I saying, oh yeah, guys, this is the top, we're going to keep going lower, right? For example, you could go down, right, and you could retest a zone like this, which is a seller zone around the daily. You could go retest this into supports, confirm buyers are interested in, buying this asset here, and then just break out. You can easily do that, right? I'm just trying to explain why I was saying this, even though the weekly close was good, why the actual buyer seller activity happening around the weekly close was not. But there was signs of absorption going on when we were at resistance. Trap traders, the whole lot, right? If I was to turn on market order bubbles, which again shows you where huge market activity is coming in, take a look at this. It's green dots basically mean market longs are coming, right? Market longs are coming in, and yet you're not getting follow through from that, which we have confirmed now with the footprint charts. You have trapped traders there, i.e., these traders are not going to be punished. They're gonna, the market's gonna make them close their position much lower, which is going to generate liquidity now, for the bigger players to again load the bags up at areas they want to, and then the trend's going to resume. Right? That's what I'm thinking. Either that, or you see something like this. If you now see a move back towards this zone, a move back towards the area between 68996 and 68413, right? And you see a lower high, then that is an area, if you're not already in a short, right, you can think about taking a hedge short over here against any longish move, because you have a daily seller zone, an area where sellers to control. You have your radon liquidity, right? Breakout, failure to retest. This would be a classic distributive top structure, right? The lower high here now would once again be confirming what was once resistance before you rated it is once again resistance. So if you see a structure like this develop, it's completely okay for you to try and take a short, right? A risk managed short in this area. I won't be market shorting blindly now because you are at support, right? If you treat this area as support, you could definitely go back higher. But should you actually get that move back up and you see another lower high being created here, and you're not already in a hedge against all your longs, then take some profits, open a hedge. Because again, if you close above this, you can just get rid of your hedge straight away. It's hardly any risk to you, especially if you're already in a long, right? But these are areas now where you protect your downside in case the market doesn't give you a breakout yet. Okay, you've got to be prepared for any scenario. So now, if you get up again, you get a relief pump up into here, and you cannot close above, you keep closing below, especially the mid, then I would consider, right? I would highly advise you to consider hedging, especially if you haven't any of your long positions. Right? I'm not telling you to go full short. No, I'm just saying it'd be clever then to at least have some sort of hedge open, right? Because you just staying fully long-sided, if you are a leverage trader without any hedges, when the market's telling you, look, sellers are still in control here, buyers are not showing the strength they want, you're just ignoring the signs you want to basically hoping to pray that the market goes how you want, right? So even if the whole of CT is bullish, but the price action here is telling you, I'm seeing signs of bearishness, and you think taking a hedge is right for you, you do so, right? You can do one reduced position size, very tight. The risk will be very tight. As soon as you close above this, right, you get any sort of confirmation about acceptance above, then you can cut your hedge straight away, right? But it would be clever to at least have some sort of hedge open if you don't go and get this lower high here. Okay, that's what I was trying to say. But all in all, I think the actual weekly close itself, like I said, the weekly candle itself was very, very bullish, right? It's just the close. You've got some signs of absorption, which is why you get in this pullback. But like I said, the local absorption here does not have to mean that you're going to reverse trend and go all the way back down. Right? It doesn't have to mean that. You could, like I said, literally just put a high low in here and then break out and do something like this. You very well could do that. So especially now, since you're back at support now, right? What was once resistance, if buyers can confirm this is support, you're probably not going to go lower, right? If you lose this area, then I'll be looking at this zone, of course, level by level. We have tops here now. We haven't retested. So that'd be the next area I look for. But as long as, buyers hold this, you don't have much to worry about, right? You're going to go higher again. Let me keep tapping back to the chat to make sure there's no questions. Great. Your sub, concludes, bro. That'd be good, man. Yeah, I got the geometry TA. Damn right, bro. But yeah, I was just trying to explain the local absorption that was happening in this area, right? So Bitcoin, all in all, great week. Close itself was not the strongest, right? In terms of again, the actual trading activity that was occurring at the top. But like I said, in my opinion, you've got to move down from that. So all you need to do is buyers need to hold supports here. You can easily reverse this. So I'm not saying flip ultra bearish, right? I'm just saying if you get to another lower high here locally, um, open a low risk hedge basically because your risk will be very, very low at this area, right? So that was Bitcoin. Now in terms of buyer and seller zones, what do we have? Previous cycle buyer seller zones over here, or seller zones in this case. We have current cycle buyer seller zones as well. So where we currently are is the 4 month mid and the 3 month seller zone mid area, basically, right, where sellers are in control. If you can flip this zone into support, much better for you to go higher. If you lose this zone of support, maybe you get one more wick down towards 65,479. That'd be the area I'd watch for. Right, you've got a weekly seller zone low there. You've got a 4 month seller zone mid there. So perhaps a wick down towards this area, close above this zone and go higher. That could be something that you see. But again, with at the area where we are, it's anyone's game, right? Because if buyers can take control of the zone, it's gonna be very easy for them to actually shoot up should the demand come in. But if they just can't take control and they put another lower high in, then bears just have that, extra argument as to why are we not gonna break out yet, right? But any questions on that before I move on? Because I know I went over footprint charts there. I know I don't usually do that because I don't usually show order flow the way I do order flow on screen. But I thought, you know what, let's do something new today. Right. Is my mic still working, by the way? Just want to check. I just want to hope I'm not talking to myself this whole time. Yeah. Okay, great. That was good you hear, bro. Right. That was an example. When we went over like delta divergence and stuff the other day. But that's an example of that, right? Absorption followed by initiation followed by delta divergence. Yeah. So that's how you look at it. Um, But Bitcoin all in all, like, look, you flip any of this zone at the end of the day, you could drop down to 64, 63, like I was saying, right? And as long as you flip down to support now, validate what was once a supply line as a demand line, you're going to go higher, right? So I'm not really worried at all. I've got my hedge open from 69. So, it's just if they give me lower, I'll take more profits. If they give me a lower high, I'll size up, or I get stop to our break even and, how longs keep printing is what it is. So that's BTC. So now let's quickly look at Dixie and such. Once a week. Why not? To begin with, we have the Dixie. Again, in terms of this is really, really weird. And the reason I'm saying this is really weird is because this is the first time I've seen Bitcoin have green, I mean, like, Dixie have a series of green candles when Bitcoin's having one as well, right? Because normally you see the opposite, of course. We know the inverse correlation is very real. So in my eyes, what this means is there's going to be one big move coming for one or the other, right? So either Dixie's about to just crash and burn or Bitcoin's about to crash and burn. That's the way I'm taking this right now. Because should Dixie crash and burn now? We're going to get that inverse correlation back, in my opinion, because I would expect Bitcoin to go ham if that happens. Should Bitcoin crash and burn now? I'm expecting Dixie to go back towards 109 and higher, right? Maybe. Um, so it's just right now, it's really, really weird because normally you get that inverse relationship, right? When Dixie tops out, Bitcoin bottoms out. When Bitcoin bottoms out, Dixie tops out. And, again, for those of you that were here from last year, you guys know that was one main reason why I gave so many different calls last year, right? Because Dixie was raiding liquidity off its range highs. It looked like it wasn't closing above the macro 382. So this basically looked like SFPs after a liquidity raid. And USDT dominance was doing the same thing, was putting in lower highs around the September to October time over here, right? We know both of these are inversely correlated to the crypto markets slash risk on assets as a whole, right? Which is the reason I gave so many calls over here, especially last September to October. We're not seeing that right now, right? We're not seeing that inverse correlation play out really. We are with USDT dominance. Right? With USDT dominance, you can literally visualize it with this parallel channel, right? USDT dominance kept going up, Bitcoin kept going down, right? And now USDT dominance been in a local downtrend, Bitcoin's been in a local uptrend. We can see that. But with Dixie, we're not really seeing it, right? So of course, Dixie has a multitude of other factors, right? Outside that USDT dominance doesn't. But it just make me wonder what's in store for us, right? What's in store? Because it's really weird that we're not seeing the inverse correlation right now. But all in all, Dixie bouncing from support, right? I was really hoping we'd make a lower high at 103.522. On the weekly, we are not doing that so far, right? So if we keep going above, of course, we have our other levels as well. Let me turn out other levels back on, group one, and let me turn some things off. So XABCD pattern, that one's hit. This one is off. Let me turn the fans off right now. Yeah, there we go. And let's look at this a bit deeper. So 3 days. Zoom in. Right, there we go. So what we have is we did have this shark, right? 1.13. The shark has literally gone and hit. You've exceeded the target of the shark. So now I'm just going to take this to this peak. That's the next shark that we could potentially be having. 1.13. You've exceeded that from that peak as well. So any sort of lower highs around here would be great, right? It would be absolutely amazing. Does not mean we need to get one, of course. So if I put this all the way up here now, 886 slash, whatever, basically 2.24, that would no longer be a shark. So yeah, that W shape we had hoped for, that's not really playing out so far, right? And this right here, what we're doing again, we held the bottom of the zone, right? We rated this zone here. The black is your true range. You have your range highs, you have your range lows, right? The white is your range extremes because that's where we've liquidity rated to. We went back, rated the black line here, right? The gray box, closed back above again, confirmed this to be an SFP to the downside, meaning you're not going to go up. And therefore, after that, you just gone up, right? You've now reclaimed once again this green zone we were talking about, right? A couple streams ago. So we've reclaimed the green zone. We see the retest there. You're getting a successful reaction of the retest so far. Next area, 105.005, basically. That's what I look for. If you can flip that into support, you have 105.872. Above that, straight back towards 107.305 to 109.150 anything, right? Somewhere between this zone. Because that is a very, very powerful sign that buyers are still active down at these lows for Dixie, basically. So that this right, Dixie right now looks bullish, right? Still range bound, but these candles right here, obviously consecutive green candles, still bullish. We could still go in and make another lower high. That's the thing. We could go up here, make another lower high, and then die, right? That's the scenario I'd be hoping for. But should we literally get out, break out, retest, convert the 8786 into support, so on and so forth, Dixie could have room for higher. That's just something to watch for. So let me get rid of group one for now. Let's look at this bigger pitch fan. So we have just taken a macro pitch fan here. High, low, lower high, right? Where did we top out in 2022? We topped out at, and let me just check this one, this one, and this one. So there's your range extremes. We topped out at the 764, 786. Right, so your deep value extensions is where we topped out. What we're currently doing is literally chopping around the golden pocket of the pitch fan. Right, so in terms of the pitch fan, you're literally chopping around the golden pocket, and you're more than that, you've gone to reclaim. Right, you're trying to go to reclaim your golden pocket into support again. If that happens, the liquidity rate of the golden pocket is what I expect next. You have an intersection around March 2025 at 109. So you have a price target that is possible in both price and time. So you're not going to be surprised if this target hits by March. Right, that's what we're saying. So Dixie, it doesn't look bad for now, right? You're flipping important levels that you need to hold. If you're bullish on the Dixie as support, you're treating them as support right now. So that's obviously a argument to maybe not be fully risk on right now, which is, like I said, is really weird because USDT dominance is flashing other signs, right? And Bitcoin itself is currently at resistance, so that's something to take into consideration as well. But right now it's just a Dixie and Bitcoin, right? Dixie and crypto as a whole, let's say. We're just not seeing that inverse correlation play out right now. You don't see that often. It's pretty weird. Let me get back to the chats. Yeah, I agree with you, Rasadi. Yeah, for sure. How long we have now? It's November 14th or 17th, right? The election is not far now, is it? November 5th. Oh, okay. Oh, wait, no, sorry. I mean, yeah, 14 or 17 days, somewhere around that. Was what we had when I looked at it last. Yeah, not far now, for sure. On Polymarket, like, Trump's pulled really, really far ahead. And not everyone trusts Polymarket, but as crypto traders, crypto Twitter takes Polymarket seriously. And on Polymarket anyway, um, yeah, Trump's pulled really far ahead. Last I checked. Yeah, the betting side for sure, for sure. Absolutely crazy that you can bet on like presidential elections. That gives you an incentive to try and put one ahead of the other. It's absolutely crazy. But yeah, so that's the Dixie. USDT dominance on the other hand, guys. Take a look. The uptrend that you're in locally currently broken. Right, you see you've had a breakdown. What you want to see here is what we're getting right now. You want to see a confirmation of a breakdown. Right, so I would look at something like this. If you can make a lower high over here in this zone, confirm, what the bottom of your parallel channel, the demand line, is now resistance, then you've confirmed you've broken this trend you've been within. So then you'd expect lower, which again would correlate to us going higher, right? In the markets. What you don't want to see is you don't want to see again something like this coming to play. I reclaim and going back into support because then that would push us further down in the crypto markets. But for now, look for that lower high in USDT dominance for continuation to the upside for crypto as a whole. Right. So other things to look at, we've looked at total already, right, last week, but we're going to look at it on a weekly basis. So total one looks absolutely great. It doesn't matter if total one has a pullback here, as long as we can stay above 2.185 trillion, right? That's always been the line in the sand for us. Why? Because again, on the 12 months previous cycle, that was your seller zone low, right? You have a buyer control candle, you have an area within the buyer control candle where sellers to control back from the buyers. So you're saying if you want this thing to make new all-time highs, 2.185 trillion, 2.597 trillion, and 3.009 trillion are three levels that you need to treat as important support and resistance. Right? You need to flip these three levels into support for you to go higher. You're currently rejecting the cycle off the zero point 0.5, right? But we've not closed the year yet, and we're above that 2.185 trillion for now, right? A close above 2.185 trillion would be huge because you're saying this is the area in the previous cycle where you couldn't get a candle body close within, right? Meaning this was the area buyers couldn't establish a zone of control, but now buyers are attempting to do that. So a close above 2.185 trillion on the yearly would be absolutely huge, and I would expect that pushes us higher, right? But for now, we've got the breakout again from 2.185 trillion. So, if you get a retest of this zone, like basically back down towards 2.185, as long as you're getting candle body closes above on the retest, right? That's what matters. You want to see the candle body closes above on the retest. But we accept above 2.185 trillion. The next line, target line in the sun again, will be going to flip 2.597 into support. You can see every time you've got up here this cycle, SFP, SFP, lower high. So we need to go do something like this. Basically, what Bitcoin needs to do, right? Bitcoin needs to go take out all its external range liquidity. Total one is just literally needs to do the same thing. Flip this area into support, and then you can go high. Total two looks great. We've already talked about why as well. We did it last week too. But again, the area it's at, very important support resistance from history, right? A key inflection area. You can see that here, reflected in this price action that we're seeing here. And now we've reclaimed this to be support, and now we're trying to trend higher, right? So our next area here, get to the gray zone. If you flip that into support, get to the top half of this box, right? And then after that, we'll be having the same discussion we just had with total one. The three macro levels, if you want total two to make new highs, is 1.311 trillion, 1.509 trillion, and then 1.707 trillion. Flip these three levels into support, you can make new highs, right? Treat any of these as resistance, then you're going to see exactly what you're seeing on total, right? You say, for example, you start SFP in the mid, you're probably going to get a pullback towards the lower half of the range, right? But now in terms of returns, this is why what is reflected in the market, right? Total one is literally at nearly its all-time highs, right? Reflected by the fact that Bitcoin is at its all-time highs, right? Now total two it's got a decent way to go before it even gets to its yearly seller zone. Reflected by the fact many alts are currently at the lows, right? You take Bitcoin out of the equation, so is ETH. ETH is nowhere near its highs yet, right? So we take that into consideration. Total two definitely has more room for upside than total one. In terms of data, we've already got on the screen. I want you to talk price discovery, of course, that's a different story. But in terms of levels we already have on the screen, total two obviously has more room to go up than total one. And similarly, if you look at total three and others, they have more room than total one and total two, right? Which is again reflected by the fact that ETH is currently higher in its chart compared to its overall range than many of these alts are, right? Many alts are still bottomed out, right? So total three, you can see is actually reflected by the fact total three isn't even above its key supports yet, right? So here, resistance, support, support, resistance, you're still below that level, right? So you get above this, we can talk about, okay, the alt and alt rotations that would take us higher to this zone. And then, of course, we have a 12-month seller zone up here again, but we're still below resistance for total three, right? So you still have time with your alts, basically. You want to see something like this. Trade above this, we can push higher. And this is further imposed if you look at the actual others chart as well, right? Others as well, we have the falling wedge breakouts. After the breakout, we've got a nice move up, right? Which is why, many of the alts have had a run off the lows, right? But again, others once again is at critical support resistance from history now, right? There. Currently treating it as resistance. You're not going to get your full blown alt season yet. We need to get above this for both total three and others, right? We need to get above this. Now pair this with others dominance, and it just gives you an even better story, right? Because now others dominance is at critical support, right? So how much of the crypto total market cap is due to others is what this is showing you. Basically, coins that are not in the top 10, right? And where we are again, very similar to how what USDT dominance was doing, a very, very important demand zone. Not demand zone, but rather demand line, right? You're at a very, very important demand line. And if you look at this from just this perspective, it's very, very simple to actually manage your risk because what you're telling yourself is you're saying you're interested in building your old bags as long as others dominance holds their spots. Okay. The day you see an others dominance actually close below and confirm below this uptrending box, you can literally cut your alts. You can cut yours because you're saying, look, others dominance has lost critical support. We might now just have that flush lower, right? And if others dominance gives you that flush lower, what you're saying is the dominance owing to the altcoins that are not in the top 10 is crashing, meaning money is coming out of these altcoins, right? So all your altcoins that aren't in the top 10 are going to be bleeding really, really hard, right? So you can, if you're in any coin that is not in the top 10 by market cap, then if you wanted to keep it really, really simple, you could literally just look at the dominance chart and then manage your buy slash sell thesis around the level that you're currently at, right? Right over here. And we've already looked at how, speaking again, in terms of wave structure, you have a completed M shape, you have a Gartley, you have a really nice type 2 of the Gartley. And, if this type 2 remains successful and you do not lose this level, that is just further confirmation on this Gartley, right? Meaning buyers are still being active where they need to. You have a thesis to hold on to your altcoins. You start seeing this being lost, right? That thesis goes out the window. And no one's going to blame you for literally just dumping all your alts. And you can just rebuy when this gets reclaimed, right? Better safe than sorry. Because once you break trend, no one can tell you how low did we go before we recapture structure, right? All we can do is make educated guesses based on what we see previous forms of confluence, right? Wherever buyers and sellers acted before. So let me go back to the chat and make sure there's no questions. Okay. So that's others. And then last but not least, I still think total DeFi looks so good, right? And the reason DeFi coins ran last week was again because when we looked at it at the start of the last week, we were saying as soon as you get above 77.103 billion, expect a little cash injection, right? Which is what happened, which is why, DYDX, it ran off the lows, right? Or one of the bags I said about Uni, another one. Um, Sushi, right? Many DeFi coins started running last week. And it's because you got above 77.103 billion on total DeFi. Right? Total DeFi looks really good. You have this completed M shape here, right? You have a bat. From that bat, you have a consolidation structure. And then you have your breakout from your resistance of the consolidation. And then you have your retest, right? Confirming both the breakout to be validated and also confirming this demand line to be valid. And now you're just holding that, right? So as long as you stay with this demand line, it doesn't matter if you have one more drop down towards 70.419 billion. As long as you make the higher low there, you don't lose levels, right? Eventually you're going to go target this red box, right? And then after that, probably some more chop before you go take the B, flip that, right? Go for the CNA. And again, if you want to make new highs, that's how you're going to be going after this. On the 12 months, your 12-month seller zone is right over here. One sec. Here. It's okay. There's your 12-month seller zone. So for B, these are the three critical levels that you need to hold as supports before you even think about going higher on total DeFi, right? So this would become your target. And perhaps this cycle you don't get here, right? Perhaps this cycle you go as high as this again, or perhaps this cycle you actually go SFP at this area, right? Put in another macro higher low before next cycle total DeFi runs, right? Who knows, right? But those are the levels you're going to be watching for regardless. The price action you're going to be looking at around these areas is going to be very, very significant. So that's all the macro charts, right? So is there any questions on the chat? If there isn't, let me move on. So we looked at Bitcoin, we've looked at all these macro indicator charts, as I like to call them. So let's move back on towards some of these coins, right? So let's go over our main coins first. And when I say our main coins, I mean obviously um, the coins that are mainly in my portfolio. Um, I've always been very vocal about this. Bitcoin and Ethereum are two biggest swings. We have Solana, Injective, Aptos, Vanry, and then AVAX, Say, Sui, Ondo. Those are my top eight, right? Been saying this from day. Um, so let's go over those eight first, and then after that, if you guys have any chart requests, put it in, and we can go over some. Let's see if we can find any setups. But let's begin with Ethereum. Let's go on to the weekly first. And again, for those of you that may be beginners in the stream, if just in case there are any, if you're trying to chart a coin, always go into the higher time frame first. Okay, don't start on the lower time frame. Go into the higher time frame first. Find your areas of significance as you see fit, and then from there you can expand on to the more lower time frame. Okay. Many beginners I've taught, they do the exact opposite. They say they're support resistance traders, but they're doing this for 5 minutes, right? 20, 30, 40, 50 different lines on the 5 minutes. You're not going to get far doing that over a long period of time. Okay. So, firstly, Ethereum, what have we currently done? We know we've had the zones marked out for ages now, right? Keys, call them key inflection areas, but these are areas where you're saying, okay, if this level holds, you're not expecting lower, you're expecting higher to your next range, basically, right? So we held the bottom key inflection area, we've come up, we've had our breakouts, right? We've rejected the 40.28 to 35.81 key inflection area. We've come back down to 22.82, 2030 as supports, and the support is held, right? So we've been here for a few weeks, and sellers they tried multiple times to actually try and take control of this zone. We see every time price did go here, what we're saying is the demand was so high that sellers weren't able to take control, right? We can see that. Huge swing failure pattern to the upside, right? And then again, when sellers tried to close again, where did you actually end up doing? You ended up closing the candle above 22.82, right? So buyers demonstrated they were not willing to let sellers take control, right? So this, when I say I'm looking for price action confirmation, this is what I'm talking about, right? Which is why I don't set blind limits most of the time, because as personally for me, the way I trade, I value confirmation much more than just setting limits, right? If I ever set limits, it's always going to be reduced size, and then I will follow up on that limit order once I get the price action confirmation I'm looking for, right? So these right here, that was very strong price action correlation here that buyers are in control, not sellers, right? Which is what you want to see. Buyers are in control, so you broke out, you put in under the high low, this time at the golden pocket of your speed fan from the low to the high, right? So the golden pocket of your speed fan from the low to the high, you tap the golden pocket. You also went to hit the liquidity rate. Okay, in my system 702, 707, that's the liquidity rate of the 61866 golden pocket. You hit the liquidity rate, right? Stop to anyone maybe trying to get long off that 61866 because we know it's a high traffic area for FIB traders, right? And then you confirm the 61866 to be support once, twice, and now you've broken out of it again. If you can just go and put in a high low somewhere around the 618 now, right? This would be really, really nice price action. And then a expansion up back towards 35.81 to 40.28. That's what I'd be looking for. Right, for ETH. Very, very simple. That's why I just haven't made an ETH call in ages. You're literally just holding. You're waiting for price action to just expand now, right? And this is why with swings as well, the way you DCA matters, right? You don't want to DCA in a way where you spend your entire clip. You've unloaded the entire clip within a week time frame or something, right? Because on the higher time frame when you swing trading, you've got to account for the fact that you don't know when the market makers are going to push the price to the levels you want, right? You could be right with your thesis. You could be right with your levels, with your key levels, right? You could be right about everything. But if you're not right with the way you position, everything else doesn't matter, right? So you've got to learn to position properly. So we could chop here for a while, but at the end of the day, as long as we don't lose this, right? That's the line in the sand. As long as we don't lose that zone, we are going to be trending higher now. Okay, because the price action has already told us buyers are interested in this area, right? So unless we get a price action that now goes and completely devoids that of any validity, there's no reason to be blindly expecting maybe we go down towards 1070 ETH or 1550 ETH or something like this, right? Because there's a key level that needs to be lost before we can even talk about those levels. And we just have it, sellers just haven't shown any control in the area yet. So very simple on ETH, as long as you're above this zone, your thesis is we're eventually going to be pushing up towards this area, right? Above this zone, you have one all-time high, zone key inflection area 46.70 to 48.68, right? Get above that and confirm above. It's going to be price discovery for Ethereum, right? So very, very simple. On the macro outlook, ETH is really, really simple to actually gauge. Okay, as long as you're above this zone, there is no need to be bearish. Go back to the chat. There we go. Okay, so that is Ethereum. Let's now take a look at Solana. Right, so Solana, what level were we talking about? We were saying this is the line in the sand for Sol, right? 12-month seller zone low at 169.94. I think we actually looked at this last week as well. We were saying if Solana can flip above this, then we have reason to expand up to 215 real quick, right? If it doesn't and you treat it as resistance again, you don't have a reason to expand up anymore. Again, why at this level? Because if you go back to the 12 months, look at previous cycle, what do you have? A candle where buyers are unequivocally in control, right? You can see that. But you have an area within that candle where sellers took control back from the buyers. I'm simply marking out that zone where sellers took control back. And I'm saying, okay, this is an area where sellers were in control. If we want Solana to make new highs, we need to flip this area into support, right? So you have your low, your mid, and your high. And these three levels you're basically going to take as very, very important support and resistance, right? So first state of affairs for us as Solana bulls is flip 169.94 into support. And now this number might change slightly because I'm doing the index chart, right? If you go on Bybit, Binance, Mexi, the 12-month seller zone low might be slightly different, but the thesis is the same. Whatever exchange you're on, go flip that level into support, and then you go good. You're cleared to go higher, right? Above 169.94, I'm looking around 215. Ultimately, above that, I'm looking at 260.05, right? So what did we do? We went to that area, swing failure pattern below, right? So currently Solana is if you're thinking about entering, I wouldn't do so just yet, right? Because if you're not already in a trade, I think you should hold out a bit more if you've been holding out all this time. Don't enter blindly here, right? Because yes, this could be a flip of support, but this could also be a rejection from a major level, a liquidity rate before we go back once more towards our range, right? Something like this could very easily happen, just as much as something like this can happen, right? So at the area you're currently in, it's a coin flip if you enter here. You could go do this and carry on going higher, or you could literally do this and carry on going low. It's a coin flip, right? So now, if you're not already in a trade, you should be waiting for one or two things. Do you get a successful well, I mean, technically, you've already had a successful pullback into this zone on the daily, right? But let's say now on the 3 days, what I'm interested in, do you get at least a successful 3-day retest and confirmation of a break above this area, right? If yes, that's great. I still wouldn't enter until 169.94 gets flipped. Your second state of affairs is, do we do something like this? Because if we get a breakdown and retreat this zone as a resistance, you have a very, very good short opportunity in your hands, okay? If you took the short here, you're obviously chilling right now because your stop loss is a break even, and you don't need to worry about, okay, if I comes up, I'm going to get liquidated. You're not. You're just going to be stopped. You're just going to be stopped out break even, right? But at the area you're currently within, which is a zone you need to flip and a zone you need to flip, it's a coin flip, right? Heads or tails? Do we go and flip this? Do we go down once more to retest this, or do we break down, retest the resistance, and go lower, right? You don't have enough of a movement of margin either side from where you currently are to make a trade that is risk to reward worthwhile, right? Therefore, I would not touch Solana as a leverage trade right now. Either you wait for the flip of 169.94, right? Or you see, if you get any more pullbacks towards this area on the daily or something, you go and you see all buyers stepping in. If you see buyers stepping in, then you can try and take a lower time frame aligned. So if you look at the daily, for price action analysis, is 1 hour entry models for me, right? Go down to the 1 hour, try and see if you can find 1 hour entries, right, on your leverage trade, but only if one of the either side gets taken. Either this happens or this retest happens, right? And if you break down, then you're looking for that failed retest for the short. Where you currently are, entering right now doesn't make any sense. It risk to reward wise, nothing's worth it, right? Because you're still below a key level and you're also above a key level. It doesn't make sense to take a short, nor does it make sense to take a long, right? Because as long as you're above this, technically there's no reason to be bearish. As long as you're below this, technically there's no reason to be overly bullish. So you don't do anything in a situation like that. Okay. Sometimes the best trade is no trade. And at this area, I would recommend no trade for Sol. Again, either flip, break down, retest for the short, or reconfirm this is support once again for the long. Long opportunity, short opportunity. Three potential ways you can look at this to try and see what's the next trade you're going to take on Sol. Right. That. Let's go back to the chat. Okay. So next, let's take a look at Injective, right? Injective, again, went back to the key area. We were looking at this seller zone here, or was this a buyer zone? Let me check. I believe this was a 3-month buyer zone actually. Yeah, right there. Right. So we have a big red candle on the 3 months on your quarterly right here. Huge sell candle, but we have an area within that sell candle where buyers were active. Buyers took control back from the sellers. Right. You have a buyer zone on the 3 months, which is that purple line. Outside of that, this big red zone, what is that? Again, that is typically 12 months for me. You have a huge 12-month seller zone, right? Area, you have a huge buy candle, a green candle, meaning buyers were overly in control. We have a huge zone within this area now where sellers have taken control back from the buyers, right? So you have a 12-month seller zone. So that is what the orange, not with orange, the brown, sorry, this whatever color this is called, and this right here, more purpley color, right? That's what these two are representing, 3 months and 12 months. And the blue is simply the weekly, right? On the blue, I just marked out a weekly buy zone here when this price action was occurring. So if I actually hide the blue ones, if I hide this, why did we reject what we did in injective? Well, that is because that is the 3-month seller zone high. Sorry, 3-month buyer zone high, right? Above this is the area where sellers are in control on the 3 months, right? So we need to flip that into support if we're saying we want to go high. And for now, buyers are not demonstrating their readiness to actually take over all the supply in that area. That's what we're saying in terms of price action, right? So state of affairs above, basically I treat this like a zone above 23 and 25. You're above both a 12-month seller zone, right, which is also a all-time high at one point, and also a 3-month buyer zone, right? So you'll be above. You have no reason to be overly bearish above 23 to 25. This zone here, above this zone, I'll be targeting 32. After 32, I'll be targeting somewhere around 44 to 45, and after that, all-time high at 53. Above that is price discovery. I probably wouldn't sell until I think Bitcoin's topping out on a macro level. Probably injective is going to be at 3 digits, right? Which is what I'm hoping for anyway. Um, but yeah, injective looks good overall. Like the bottoming structure was really, really nice over here. We take a look, right? We got the retest. Oh, we got the test of the Gartley 1.618 right over here. After that, we got a higher low at that 12-month seller zone low, right? Here we got confirmation. We got confirmation. The 3-month buyer zone also got trying to support right over here. And now we're just chopping in between the 3-month levels, right? Currently, you're literally at the 618 of the Gartley, which is confluence with the zero point 0.5 of the 3-month seller zone, buy zone mid. You hold this level, right? On the weekly, even better. You hold this level on the weekly, you could definitely push higher from here off a valid high low. You lose this, I've been looking for wicks down into around that 18.58 area, right? Somewhere around here. So that is injective. Take to the chat again. Show us the question. You're subdue. How you doing, brother? Just saw you were in the stream. Right, that's injective. Let's move on to Aptos. It's been moving, right? I'm up huge on Aptos. Our average is literally down over here, right? So we pretty much hit a 2x on this. I'm not selling anytime soon. I'm going to trim, right? I've done a little bit of a trim. I'm not selling huge positions. I'm going to trim with the more proportional size. Should we see SFPs at this box, right? So this is a target I'm still looking at. Above this $20, there's no question in it, right? Above this, actually, wait, I missed this. On the higher time frame, we have a more viable zone. Okay, so between 12.61 to 14.41, that's where I'll take some serious position size, not here. I'd look at price action. I'm not going to set limit orders. What I'm going to do is I'm going to set some alerts and I'm going to see, okay, once price gets to this area, should we start seeing SFP, so actually sellers being active just off this zone, then I'll offload some and then look to compound that on a higher low again. Or if I see sellers just not being active here, this is the zone I'm looking for to see, okay, do, sellers step in? If yes, then I'll offload some positions properly. Above this, again, $19, $20, and then all-time highs at 30, and then price discovery. But, that could take ages to play out. Right? Just because you're an uptrend doesn't mean you need to go there tonight or tomorrow night. We could chop in this drone for a while now. But the structure again for Aptos was really, really nice, right? So I do believe I explained this in last week's stream, okay? But I will do so again. What do we have? We have a low, right? And these lows, again, they were given back in January, guys. Go back in my channel, right? I gave this literally the start of this year because this was already a key area to watch. So it should be no surprise to anyone that I bought when we got here. The alerts were literally sent out in January of this year. Plenty of time has passed since then and now, right? We alert was sent out in January. We hit these deeps in August, right? What did we do? We bottomed out, right? Firstly, what is this structure? Right, this is almost like an inverse head and shoulder structure here, right there. You have a low, you have a raid on your liquidity versus a reclaim of the low, right? You have almost like a spring/spring back test kind of scenario going on here. If you're thinking in Wyckoff terms, right? You have your spring, you have your spring back test happening right over here. You've reconfirmed what was once resistance to be what was once support to be support, right? Support, raid on liquidity, back into support, higher low, and then you moved up after that, right? And then after you moved up above that, what did you do? The last lower low that led to a lower high in your downtrend, right? The last lower low that led to a lower high. Sorry, the last lower high that led to a lower low. Sorry, I said that the wrong way around. The last lower high that led to a lower low in your downtrend got raided right over here, right? So this is your, this is where you say, we're now shifting structure, right? All you want is a high low. Where did you go to? You went to a weekly buy zone mid for this rejection. And then you came down back to the weekly buy zone low for the support right over here, right? So if I was to switch to the weekly, let me show you where that is. Right over here. You have an area in this candle where sellers were in control, but buyers took control back. This is your weekly buy zone, right? And those levels is exactly what you went back to actually confirm resistance slash support, right? You confirm the resistance here. Back down here, confirm the higher low at the weekly buy zone low, reconfirm this to be support now, right? Reconfirm now, also confirm what was resistance to be support, and also confirm the breakout from this supply line, right? Beautiful price action. You put the high low in. More than that, if we now take a shift and we go down to talking about fibs, what we have here is, if we take a look from this here, golden pockets, students, right? From this low to this high, right? What I'm doing is I'm putting down a fib speed resistance fan on the trend, or rather on the price leg that broke trend, right? I found this to be a very, very powerful trick. This is the price leg that broke the trend. Put a fib speed resistance fan down. What do you see? A high low is exactly at the shallow retracement golden pocket, right? And I would say this next point, I don't know if I mentioned this before, but I'll mention it here now. If you are bullish or bearish, it doesn't matter what you are. If you believe in the trend you are currently in, right, and the current trend you're trying to put now is an uptrend, you're trying to confirm you're out of the downtrend. If your trend is strong, right, and your trend is to be believed, you want buyers slash sellers stepping in at your shallow retracement fib ratios. Okay. The way most people use fibs is very linear. They just throw a fib retracement down and they say, oh, it's 618, 786. I'm just going to wait for that to be hit. But if you're, in this case, we're trying to break into an uptrend, right? So if your uptrend is valid, right? So you've broken your shifted structure, you're just looking for the higher low, you're saying this asset is currently in demand, right? If that is truly the case, now think about it logically. What you're saying, if you have a 61.8%, or if you have a 0.618 fib ratio, you're saying, I want a 61.8% discount on this asset, right? If you truly want demand for your asset, which is what you want if you're a bull, why are you looking for a 61.8% discount out of nowhere? Right? Because a 61.8% discount or lower, right? 0.786, that's a 78.6% discount, right? 0.886, that's an 88.6% discount. That is deep value levels, right? You're saying literally, I'm getting like more than 60% off on this asset. If your asset is hot, it's in demand, logically speaking, buyers should be stepping in way before you get a 60% discount, right? So you're saying if you're an uptrend, you do not want a 61.8% discount, right? Because that is indicative of a lack of strength slash lack of demand from the buyers, right? You want buyers stepping in at your shallow retracement zone. 30% off, great, I'll take it. Let's go up, right? That's what you want. So when you see buyers stepping in at your shallow retracement ratios, right? You do not just fade this and say, oh, but the 618 could get hit. No, you take action based off that. That is confirming your thesis. That is confirming that, yes, this asset is in demand. Buyers are willing to participate in buying this asset off of just a 30% discount, right? So there is no reason to be waiting for the deep value ratios every single time you put a fib retracement down. Right? This is one of the biggest things I see people do wrong with fibs. They just put it down and say, this is what the 618 is, therefore I'm just going to wait for that, right? Before you hit the 618, before you hit the 786, 86, more often than not, the shallow retracements will have been hit You will have put lower highs in, right? In the case of your current uptrend, and the structure will have shown you're now in the downtrend before you go anywhere near those deep value ratios, right? So the price action will tell you beforehand. But there's no point putting a Fib retracement down, right? Or whatever Fib application you're using, and then straight away just honing in on the deep value ratios, right? In a bear market, sure. If you're willing to wait 5 years, sure, right? But if you're trading, that doesn't make sense, right? Everything has to be in context. There is no context for a straight up 61.8% retrace. Okay. Hmm. So the first from that low to the high that shifted your structure, 0.34, 0.382 was held as support, right? So what about your next high, right? Again, if you go to the next high, you will once again see where did you bottom out? The 34382, right? Look, buyers are not letting you go deeper. This is bullish. You don't just sit here and say, oh, but we could get deeper prices. If you miss the chance to build positions down here, you don't just blindly pray, I hope you go down there again, right? No, look, the train is literally, this is literally telling you the train is now leaving the station. Right? We're progressing up and up and up. So over here in this case, again, 343 to shallow retracement golden pocket zone, right? Wick to that area, you held it, you went higher. So this was my last size up and up toss. And the other size up I did was right over here at this higher low, right? And this was even higher than the 34382. What we have over here is if I delete this once and I open up the fib speed resistance bands, this is the shallow ratios, right? Shallow ratios for students right here. We have the low, we have the high, you literally bounced off the 214236 on, right? You got so much demand, you're saying, look, we're not even going to let you have a 38% discount, right? Everything's in context, right? Buyers are stepping in where they need to. 20% discount, great. Let me get it. This asset is hot. I'm expecting it to go higher. Everyone's expecting it to go higher. Therefore, buyers aren't going to wait for a 61.8% discount before getting it, right? In this case, they literally, everyone jumped in at the 214236 on, right? And now your SFP, your range extremes, basically, that's what's happening. What I'm trying to show here with all these different aspects of TA, just to show you, look, Aptos has been bullish. It has been bullish. It's been flashing signs of bullishness. I've been looking at it on stream each week, right? So we are not surprised that Aptos again had one more move up to $11. We are not surprised at all. Okay, this coin is literally one of the nicest in terms of showing you its currently flipping trend. Broke out, retest of the breakout, confirmed the high low, rated that previous high, another high low, right? Another high low at the weekly seller zone, sorry, buyer zone top, literally front run it as well. So again, in context, what you're saying here is you're saying the demand is so strong, the buyers aren't even letting sellers come down to retest this area. Right? Seeing SFPs of that 214, which is what was there. We're not buyers are saying, you know what, listen, we don't want your supply, or rather we do want your supply, give us everything, we're going to take it all. We're not going to let you go any longer. Right? There are too many people waiting to buy this asset, is what we're saying. So as soon as you see something like this in context, again, that is so bullish. They're literally not giving you a retest, right? They're front running the retest. So Aptos has been insanely bullish, going up. So again, if you're now looking for an entry model on this, right, the easiest way to look at this is on the daily, you have this zone, right, which is what you're currently under. So if you can flip this to support on the daily, you could actually just move higher to these zones before coming lower. Or on the weekly, we have this seller zone here. And what you want is a pullback to this area on the weekly / the 2 weeks, right? You're going to pull back into this zone anywhere over the next coming month, right? Towards 1026, perhaps 1022, towards the low at 999. Then you would take the shot there based on the price action there, right? So currently, obviously, you can see now we are at resistance. So you're not going to open up any fresh positions now, okay? Not unless you're sizing up from way lower position size. That has been Aptos. So again, let me go over here. Yeah, it works. It works really, really well. So we have this right, and next we have Vanry. Vanry still at amazing areas. We got a 48% pump on this, and now you're back to where we started. Okay, so if anyone missed the original move up on Vanry, then you're literally getting a second chance at that same area. Right? Look, we have come out of the falling wedge. Your M shape has completed. Right? You have not lost your M shape. Let me go to this chart here. Dirty godly, but still, if you take Vanry from the low, XAB, hedge 0.618, right? That's a slight deep wick, but I'm taking it as that's what that was, right? It was a wick followed by your actual price action continuation, right? You can see the 618 was regarded as support many, many times and resistance at the breakdown. So 618 was clearly actually validated, right? Back off of the 401 and your 786 is right over here, right? So you flip 0.095534 into support, you're back within the good graces of this guard, right? You don't flip it to support and you treat it as resistance exactly like you did 2 days ago, you're probably just going to chop around this range a bit more before you're ready to move higher, right? But now on a macro level, VanRe is at an area, right? We've explained this every week, so I'm not going to go into this too deep, but it's at an area where you could very, very easily manage your strategy when you're considering a lateral in strategy, right? Because look, sellers have tried to go lower before, they've not succeeded, and then they've tried multiple times to go lower, but buyers have always defended this range low. Right? So you're not going to be surprised if eventually sellers, there's a shift in the market where buyers realize, oh, there's no more supply here. The only thing you can do if the demand is still there is go higher for the supply next, right? Your target is going to be somewhere around this area first, right? You flip this into support, you don't have much resistance all the way up until 24 cents. You flip that into support C, 0.33 basically, and then you have 0.38 external, right? And again, I literally didn't look at the old VanRe chart. We know we've gone much higher in the past on VanRe. And so who knows, maybe, or maybe we do go higher. But even if you just consider the M shape, you have some really, really nice targets for this play. But the reason that I've got this one in my port isn't because of how high could it potentially go. It's simply because if you look at where it is in correlation to the price action it's displaying, right? It's very easy to manage your downside, and that is the most important thing for me, right? Not how high could this asset go. I don't really care. What's important is if I enter here with my strategy and I'm wrong, how much of my current portfolio am I going to lose, right? I want that to be as minimal as possible, and it's very easy to minimize that loss at the particular area if you're laddering in, right? Again, going back to my older videos for the 40-20-20 rule, right? Sorry, 20-40-40. And again, you can change the ratios how you want. For those of you who are in the streams before, you know what I'm referring to when I say this, right? This is my laddering in strategy. Change the ratios how you will, but as long as you're laddering in properly, we haven't had a trend shift yet. Wait for the trend shift for the final DCA, right? Have an allocation for lower, or in case you're turning local resistance into support, and have an allocation for CMP, right? Just a general term. And you'll be completely fine. If you follow the script, you're going to be fully positioned only when the time is right because you've genuinely waited for the trend to shift before you've done your last buy. You've exercised patience, right? That is VanRe. So next, let's move on to AVAX. I still think AVAX looks so nice. It's one of the best higher time frame charts there is. I am an AVAX bull. I have a huge bag of AVAX, and I will keep adding to this AVAX bag if they give me more buying opportunities. By extension, I will also have a huge Joe bag, right? I've mentioned this before, but I'll go over this in a minute. But AVAX, completed M shape, 886, consolidation around the 886, right? Radon liquidity here of the range before you go tap the 86 back into support, go to your T1 zone for this macro bat, and now you've come back down and perfectly retap the 86 into support, right? This is literally so nice. And also you had, buy zone mids down here, right? So you have even more confidence as to why you came here. You have buy zone lows, buy zone mids, right? Different time frame buy zones, all lining up around this 886. You could not ask for a more picturesque chart, right? So this is AVAX. I'm literally every single week I'll go over the AVAX chart. So I'm not going to go over what I'm currently doing with this. You guys probably already know my plan for AVAX, right? You've not gone parabolic yet. What you're doing right now, so the bottom of a zone of supply, if you can flip that into support, then now you have room to move a bit higher. I really want to see 30.89 being flipped to support, right? That is the first state of affairs. 30.89 flips into support. Up until we're below 30.89, there is no hopes of us going parabolic yet, right? So first state of affairs is we need to get above 30.89. So for me, anytime we come down here and we don't invalidate the original structure, it's just another buying opportunity. We're just saying, look, they're pulling the slingshot back once again, and then eventually that slingshot is going to be pulled back enough for us to get terminal velocity, if you will, right? Get the escape velocity, and we're gonna go T1's been hit. So for me, B is the first target, T2 is the second target, and the final bad target's all the way up here. It seems far-fetched for AVAX to be all the way at $150. I know, right? But when things go parabolic, do not be surprised if it does end up there, right? Because the amount of money that will come into crypto once everything goes haywire, you're underestimating the power of how much liquidity we will have just circulating, right? So 75.50, flip that into support, 150 becomes a very, very real target. Okay, very, very real target up here. 150, sorry, what's this? 147, right? Becomes a very, very real target on AVAX. So very, very AVAX literally so simple on the higher time frame. Just zoom out, right? Just zoom out. You can see this clear as day. The story's there in cursive, right? It's a very, very nice chart. Avalanche launches Visa card for cryptocurrency payments. Yeah, there we go. Go on AVAX. Yeah, I'm so bullish on AVAX, Aladdin, bro. Um, okay, so next one. Actually, before I do AVAX, let's move on to if you're bullish on AVAX, but you think I don't want to get into AVAX, I want to get into projects underneath AVAX. One of the first ones I can instantly recommend is Joe. Joe is the DEX on AVAX, right? And look, the chart is bottom the hell out, okay? And it's completed M shapes as well. This was in the completed harmonics video, right? So this is already a setup given. Joe, if you like AVAX, you like Joe. Because you're saying if AVAX goes up, the TVL of AVAX goes up, Joe is gonna go up, right? Joe is literally the DEX of AVAX. This will run when AVAX runs. So, if you're into AVAX, perhaps position yourself on some Joe as well, right? Because in terms of ROI, Joe's gonna go higher than AVAX, in my opinion, just because it's got less market cap, right? So your bigger size should be AVAX, right? But you know, perhaps let's say you don't have enough capital left over to properly allocate into AVAX. That's fine. Then perhaps look for an entry on Joe instead. But Joe is the layer two on AVAX, right? I I made nice money on this last cycle. I wasn't here when I called this in AR, but sorry, in Unity I called this somewhere else. But I literally gave this at the bottom. We rode it all the way up to 124. Just looking to read that up again, right? And from here, what we're going to do, just look for an entry. Again, you have a completed M shape, right? If I show you the M shapes here on show, where is it? Are you mad? Where's it gone? There it is. Okay, first things first, we have a macro shark, 0.88. No, sorry, that's a bat. I don't know why I've called it a shark. We have a bat 886, right? And we also have, yeah, I don't know why I've called both of these sharks. That's my mistake. I should be calling them bats. We have two different bats here, right? 86 is on both of them in this general zone here. So as long as you don't lose this zone and turn into resistance, you hold this zone of support. Eventually, Joe is going to go higher, right? So again, don't go all in at once. If you're going to think about entering this, ladder in, right? Think about the rule I just showed you. Go back to my other videos if you're not familiar with it of how I ladder in. But you can manage your risk really well on Joe, right? These are areas where you ladder in, right? These are literally areas where you start building a position on this in hopes of getting towards this target. And everything seems impossible until it's not, right? So if you go back and we take a look at what Say did, we have gone and hit our T1, right? We've already looked at this, 107% up from where we entered, right down here. If you look at what Sui did, outperformer, entire M shape's been done, right? 219% move up from where we were looking at it, right? Many coins have done this. Cetus is another example, right? It was in the original video. Where is Cetus? And the reason Cetus ran so hard, this is the reason I'm telling you guys to get into Joe. Cetus is to Sui what Joe is to AVAX. Okay. Why did Cetus run so hard? Because if we look at what Sui did, Sui's gone into price discovery, right? So then we go and look at Cetus, which is again the layer two on Sui. We're not surprised. Cetus has done the exact same thing, right? So both of these have outperformed the entire M shape, all the targets been hit, right? Um, right over here. So we have Sui currently retesting 1.9137. If this retest is successful by the time the weekly closes, you could look for a low risk entry literally around that 1.9137 level. Right? Let's say the candle closes like this and the confirmation candle the following week opens above 1.9137. You'd enter a position at CMP, right? And then you would pull your stop loss literally below the retest wick low, in which case it'd be this right, this, if this is how the weekly closed, right? So it's going to be very easy to manage your entry on Cetus, not Cetus, sorry, Sui, should you get that. If this level is lost, then I'll be looking for this zone again, preferably 150 if we can get it, or somewhere within this area. Lose that, and then yeah, back towards here you go on Sui. But yeah, Cetus is sweet, right? Cetus, you literally come into the C point. If you flip this and you miss the original entry, you could definitely catch a bid and this go higher. Because yes, now we have had a 218% pump off the lows, right? But again, if once things go super parabolic, this is going to seem like nothing. Because if sweet goes, right, let's look at where sweet currently is, right? Sweet's currently all-time high around $2.40, right? If this thing were to go towards even just $5, let's say, right? Let's say this was a 2x in price from here. You're saying Cetus could definitely do at least the same thing, right? If not more. Because again, once TVL on the main chain goes up, then the projects that are benefiting are going to be the secondary projects built on that chain, right? Sui goes up, things built on Sui go up along with it. So you could definitely catch more nice gains on Cetus, right? And again, it's not too late in the macro scheme of things. Now you definitely your risk management is going to be hard, but that's why you have again significant levels, right? So we have significant levels because now if we're talking Cetus, right? So let's go back to Cetus once. Even though we have pumped a lot, you're saying you now have a significant area around which you can manage your risk. That being 0.14167. If you see any successful retests of 0.14167, or you see any successful retests, closes above this area. It doesn't matter if you wick lower. In fact, you could very well wick lower. We have a buyer and a seller zone right next to each other over here, a huge inefficiency. You could wick to this zone, right? And if you then go and reclaim this as support, that is your entry trigger because then you can now push it higher, right? You're saying TP1, literally 0.215 again. Flip that into support, you can size up, then you're looking for 0.28, and after that, straight away 0.47, then to price discovery. That's what you're telling yourself. I said this right here, this is Cetus, right? And Sui and Say definitely, right? This has legs, this still has legs to run. You've literally broken your downtrend, you're just waiting for a confirmation of a high low, right? So as long as you don't lose this yellow box, all is great, right? You could go as low as the green, as long as you close above the mid of the yellow, that would be my ideal scenario. If that doesn't happen and you get below the green, then I am looking for something like this. Right? I'm looking for this sort of demand line to be respected. So you can see we can come down all the way to 35 cents and still be fine now on Say, sorry, right? You've taken out your last lower high that led to a lower low. You're simply waiting for that confirmation that the structure has shifted, right? And again, if you go down the route of AVAX, right, where is the trend that took, here is the wick, right, that took out your trend. So if we take the fib speed resistance fan, I'm just going to go with golden pockets for now. We have a low, we have a high. In this case, what have you done? You're now below the shallow retracement zone, right? So I'm going to do this again. And this time I'm going to put the range on as well. You have a low, you have a high, you're around the 0.5, right? This is your make it or break it level. You're saying as long as buyers step in here, there's nothing overly bearish. Your overall trend is still strong, right? If you now start flipping the 0.5 into resistance, that is when I would expect your wick down towards that 37 to 35 level at the golden pocket, right? Only once you flip this into resistance do you now have a logical reason to think maybe we get the deep value ratios, right? Before then, you don't, right? You wick to the 0.5 in this case, went up, wick to the 0.5 again, held a support, went higher, right? Now you've come back down. You've now confirmed the liquidity rate of the golden pocket to be resistance, i.e. front run the golden pocket in this case, right? So now if you lose the 0.5, you have a reason to actually come back down towards this range here, right? So then you can think to yourself, okay, price action has showed me that buyers are stagnating a bit, right? There's no 100% confirmation yet because the midway line, the 0.5, right? The make or break level, the line in the sand is still holding. But if this flips to resistance, then there's no denying that the logical target then would be the 618, 66, 702, 707, 764, 786, so on and so forth, right? The deep value ratios. So you're currently at make or break levels per se, locally speaking. Lose the 0.5, you can expect that we're down towards 38 cents, in my opinion, right? 0.3822 sort of area, the green box. But ultimately, what you don't want to do is you do not want to lose. Hang on. Go here, do this, and then I'm going to put the deep value retracements as well. Right here, right? You do not want to get below, in my opinion, hopefully what you don't do is go below the 764, 786. Should you get any deep pullbacks, okay? Hopefully you don't get this low anyway. Hopefully you only get a wick as low as the 702, 707 max before reclaiming the golden pocket and going higher, because that would correlate with support resistance being flipped as well. If you get deeper, then you're saying, all of these now have a chance to turn to resistance, right? It just becomes that much harder for bulls to push the price up. So hopefully, the worst that happens is something like this, right? And then we go higher. That's in the case that the zero point 0.5 is lost. Because if this is held and we do something like this, we literally grind up, then we could very easily do something like this. Okay. So there's literally no telling if we even go lower or not. It's going to depend entirely on how does this candle close, let's say, in relative to that zero point 0.5. But that is now say, right? So we've gone over the big, actually, no, we haven't gone over Ondo yet. So my bad. Let's go over Ondo right over here. Ondo has literally just been chilling. You're within you're retesting currently your 4-month, I want to say seller zone. One sec, 4 months. Let's take a look. So this is your 4-month buyer zone down here, meaning this right here is, yeah, your 4-month seller zone right over here, right? So you have a 4-month seller zone there, and then another 4-month seller zone if you take the entire candle into account where sellers were completely in control. You basically have your key levels based on the 4 months on the screen, right? What we're saying for Ondo is we're saying as long as you can stay above 0.7455, there's no reason to expect 63 cents again, right? Should you close below 0.7455, then all of a sudden we have all of these people who longed here and here and here waiting to get their stop losses hit, right? So then I would expect to cascade down towards 63 cents, maybe a wick down, something like this, and then above. But all of this hinges on, do you lose 0.7455 or not, right? So our 3-day candle is still ongoing. Hopefully you get a cleaner retest of the 0.7455 level by the time this 3-day retest is done, right? But again, as long as you're above 0.7455, $1.05 to $1.11 is where I'd look next. Above that area, $1.48, right? On the macro scheme of things. Those are your two key zones, let's say, to watch for. But for Ondo, your current line in the sand is 0.74455. What kind of price action do you get around these levels? Which side takes control of this area? That is what you're looking for. Currently, you're getting a front run of the 0.7455 level if you consider it as a retest, again, which is on the buyer side, right? Meaning demand is so high, they're not letting you even go down to touch this area. That's what he's saying so far. So let's see if that gets validated, right? And, we've got a reason as to why this could be a key area. For example, if you look all the way to the left, what we have here is a area in history where sellers have taken control on the daily, right? Seems to currently on the daily scale. Sellers have taken control here in the past. You can see that. This has been a key support resistance area. We can see that as well, right? So this is currently a retest of that zone. Now, if this retest is successful and you happen to actually close above this area, above 76,915, then you have a thesis for further upside. Okay. So again, we did have another completed M shape on this. So we're not surprised that, it's been grinding up, right? That's what we're trying to say. Another way to look at this is you could look at this as, okay, we have a order block right over here, right? An area where we expect bullish liquidity to come in. And what did we do when we actually hit that level? Sellers took control, right? Sellers took control. You treated that level as support and resistance, and currently you're going back to retest the mid of that to the wick, right? So if this gets confirmed, if you successfully close above this zone, you're saying what was once an area where you expected buyers to step in, and then sellers to control, buyers are once again taking control back, right? So you have that edge on the buyer side to be focused on longs over shorts until you saw price action tell you otherwise. That right there is Ondo. So let me go back to the chat real quick. You're sure, bro, Tip. I'll talk to you soon, bro. Yeah, Joe looks very, very good, bro, for sure. Joe looks amazing. Definitely in my portfolio for that reason. And you pair that with AVAX, and it's crazy. Start shouting fifth like it's on his mixtape. That's funny. Can we look at Fet? Yeah, sure. We can take a look at Fet, bro. Let's quickly look at Whiff because we talked about this earlier. I really like Whiff. Again, going back to the videos, multiple streams were done. I literally released the whole harmonic setup video with updates on why Whiff was an amazing entry. We are not surprised. We are now up 104% from that. Okay, I've not updated many of these in my channel because I updated that storage play because I was like, I was free. But there's so many plays that have hit. It's like, which one do I update? You know what I mean? I don't want to P&L dump in my channel. So I'll just update them on the videos like this, right? It's what it is. But yeah, completed M shape, right? Textbook Godly, literally 618, right? 786, 1.408, beautiful, followed by a string of local higher highs and higher lows, compression up, up, up. You can literally see supply drying up, supply drying up, supply drying up. That's what we're saying. And then finally, boom, right? It's all, if you read the price action here, right? People who weren't here, or people who didn't watch the videos might say it's hindsight. It's not hindsight, right? We were literally, I was shouting this every week saying, WIF looks good, WIF looks good, WIF looks good, right? Just because of look, the price action here was literally telling you WIF looks good, right? So now if you successfully flip T1 zone into support, you can re-add. If not, I'll be adding somewhere within 232 to 196. It's a big range, but that's what happens, especially when it's not the highest cap coin, right? You lose this red box somewhere between 232 to 196 is where we're probably gonna look for next as a target, right? Because if you lose this, again, what we're saying is we have a lot of liquidity waiting to be taken. This one has been stopped. This hasn't been stopped. This hasn't been stopped, right? So we have external lows now, waiting to get raided, right? So maybe this, maybe even deeper, something like this. But you're going to see bottoming structure come in. When that happens, you know where your entry is. But the important thing is your last lower high that led to a lower low has been taken out. So you're literally waiting for a higher low to come in now, right? You're simply waiting for a higher low to come in. The trend has shifted. We just need confirmation of a higher low to have 100% guarantee, right? So that the last 40% allocation, you're hanging on to that for now. And you're saying, I'm going to add that when I see the higher low coming, right? And if it did trim some over here, which if you entered this, you should have, because it hit a 2x, take some money off, just recompound that at key areas along with that amount you have left to enter at the actual high low confirmation. So you're going to have a back to work with. It's always nice when you have liquidity. So, okay, let's look at FED next because somebody asked FED USDT. I should have it here. I've got it on the trend ship. So let's take a look. Yeah, FED had a very, very clean price action. We had a left shoulder, we had a head, we had a right shoulder. But what we haven't got is a confirmation of the neckline retest, right? And again, this is why I love breakout traders. Breakout traders give you liquidity in the market so that you can counter trade them. People who market along the breakouts here without any sort of consideration for, okay, is this neckline validated or not, are currently trapped, right? Because what did you do? You broke out, right? Let me show you. I guarantee there's going to be dots. 1 second. I will be surprised if there isn't. No volume extension. Oh, would you look at that? Where did all the market longs come in? At the top. Where did the market shorts come in? At the bottom. It's a age. It's a tale as old as time, right? People will not enter where they need to. People will not actually look for these structures where they can manage their risk. People will enter once everything pumps green and the sentiment goes to max greed, right? Because it becomes really easy to hit market buy when the entirety of CT is telling you we're going to make new highs soon, right? But you saw all market longs, meaning people kept market longing this. Active market participants were coming in. But in terms of the actual closes, what do we see? Right? We see, even though all those market longs are coming in, we see SFPs after SFPs after SFPs. We see failure to go and challenge the highs, right? I.e., we see, even though all those active market participants, right, people who are doing market orders, they're all bidding, there's clearly the passive orders there now, the passive active market participants, the passive market participants are clearly not ready to have all the supply absorbed yet, basically, right? So the passive sell wall could not be absorbed, meaning, okay, eventually all the people that are taking pot shots at this with the market longs are going to run out of liquidity. If there's no more liquidity to keep that demand up, we're going to keep carry on going back down, right? That's exactly what happened. This is trap traders. This is why you never ever market long. Okay, I just don't recommend market long unless you literally have a not market long, sorry, you don't ever market long a breakout, right? I market long all the time. It's market long a breakout that I'm trying to say. Unless you have literally the most specific and niche tailored strategy for breakout trading, you have no reason trying to be a breakout trader. Okay. So people got trapped, you went back below, reconfirmed your supply line, not supply line, your neckline, sorry, to be resistance, right? You reconfirmed it to be resistance. What do you have? Here, radon liquidity, reconfirmation of the mid as resistance, and now it's not a surprise you're coming lower, right? So you have this external liquidity, right? That could be areas to get stopped out. So on the daily, if this carries on, I would not be surprised if Fed comes back between 123.4 and 119.3. Okay, so 1.234 to 1.193. If Fed ever gets back to this zone, then you see what kind of price action do I get. If you get bullish price action, then you would place some bids, right? Because at the end of the day, FET as well, the last lower high that led to a lower low has been taken out now. So all you're doing is waiting for a higher low, right? Does the higher low come in here? Do you literally, bounce off here for no reason and go higher? Do you go down slightly deeper into this zone? We'll have to wait to find out, right? So the day you go and flip this is going to be an entry, or if you're going to wait, the day you go and successfully show that this is holding a support is going to be a second entry. That is FET. Again, a very, very fine example of why you do not market long breakouts without confirmation. You need a thesis to be in a trade. Where breaking out isn't a thesis to be in a trade. Okay. Because a thesis would be okay, we've broken out and we've reconfirmed what was resistance, an area where we expect sellers to be in control, right? An area where we expect supply to be greater than demand. Buyers are stepping in there. Buyers are showing control, which means that now we're seeing that demand is actually greater than supply, right? After a breakout, you now have a thesis to be in a trade, right? You now have a reason why it should be long. Oh, we're going green, we're breaking out is not a reason to go long. Okay, you're just being baited more time than not. So please keep that in mind. If you are someone who catch, if you are someone who market longs, market shorts, breakdowns, and breakouts a lot, right? I'm not trying to attack you. I'm just saying like you need to, because this is not a sustainable strategy. Market long in breakouts and market short in breakdowns is not a sustainable strategy. Okay, you will be trapped, and you will be, eventually you are going to be ran. Your stops are going to be ran, or if you don't have stops, for whatever reason, your liquidity is going to be the ashes from which market makers are going to get their bags refilled, right? So please be careful with when it comes to things like this, right? So yes, we were aware we had an inverse head and shoulder strategy, but we didn't have the retest. Guess what did have the retest? Oh, that's right. Aptos had the retest, which is why adding here was completely fine. You had the same structure. Look, left shoulder, head, right shoulder. You got the breakout. But what did you get after the breakout? You got a successful retest, right? This is what FET is failing to have. This is what you would be entering on, right? Price action is telling you supply, yes, used to be supply here, or used to be demand, but flipped to supply, which is now flipping back to demand, right? You have a thesis to be on the long side. On FET, you did not, right? Because there was no successful retest. The retest attempt failed. And anyone who market longed here, they got lucky. Because if this retest had been unsuccessful, again, back down, we would have gone to 658. They would have been trapped, just like the traders on Fed currently are, right? Anyone who market long here simply got lucky because the retest happened to be successful and then you went high. If anyone who market long there thinks they're good traders, they're not. They just got lucky, right? They just happened to flip coin says heads and it happened to land on heads. That's all it was. The people who entered a trade here because you broke out, that's a shit trade, right? I'm not going to compliment that. But if you waited for the retest and then entered, yes, that's a good trade. Even if it had failed, you would have attempted to take a good trade, and that's what's important, right? Let's look at Mother. Yeah, sure, bro. I think I've got Mother on my watch list. Let's take a look at it. I opened a big short on it the other day, made like a couple grand in a few hours. Uh, let's take a look. Where is Mother? One sec. Let's take a look at what do we currently have on Mother. There we go. Finally, I was waiting for this. Guys, for me, that harmonic is completed. Okay, I was waiting for the 786. We actually looked at this, I believe, a couple of streams ago. Finally hit. Okay, so I'm gonna wait. I'm not gonna do anything yet. I'm gonna wait for this daily to close. But if this daily closes like this, I'm going to start layering in. Right, with this 20% CMP, I'm not gonna go much for a long. But if you lose the 786, I'll just cut again and wait for more price action to develop. But we do now have a completed Gartley. 618, 7, not 618, but close enough. 618, 786, 491. Basically a 1.618 here as well. This is a fine example of a Gartley on Mother. Okay, right here. So yeah, for a long, Mother looks longable now. I'm gonna get out my short actually. I didn't say alert up. So we just about front run that for now. Yeah, but Mother looks good now. Um, you can definitely wait for structure to build, guys, but that there for me is worth taking a shot at, right? So I'm gonna open a small long now. At 20%, something like that, leave 80% to size up on. Because if you just if you now start grinding up again on the daily, start flipping resistance to support, I'll just slowly size up, right? Because I've got no problem with sizing up. At the end of the day, it's not about the percentage P&L, it's about how much money you're making. And for swings, you shouldn't be focusing on trying to catch the bottom and sell the top. You should be focusing on building a position so you're positioned at the correct time to catch the bulk of the move. That should be the goal with swing trading. Okay. So, um, yeah, no, thanks for shouting that out, Rasadi, bro. Probably would have missed that. I had no plans of going through the meme list today. Yeah, Wojak, another outperformer in terms of M shapes, guys. This was given right here. Completed M shape, completed Gartley, 618. This was perfect. Look, 618, 786, 566, 1.481. Outperformer, right? You've hit the liquidity rate of your range extreme, zero liquidity rate, and now you're breaking back down. So let's see what sort of price action we get. I will look to re-add on this. On the weekly, you could come as low as this zone here and be completely fine still. So here, there we go. Any successful retest of this zone in the higher time frame, I would seriously consider sizing up on Wojak. This was an outperformer. But yeah, no, model looks good. I'm Versati, bro. This looks good, man. Yeah, finally. Jesus. So we have our, you could say, you have an 886 here, right? And yes, this is a bit deep for a bat, right? Um, Actually, no, it's not. What am I talking about? I saw it was a different number. This is fine. You have a bat, completed M shape. You validated one check. If I do this and I say 4 harmonics, go from A to here. Yeah, so you basically hit your T1, right? You've hit your T1. Let's make a high low and go to T2. That's what we're saying. That's literally what we're saying. Yeah, mother, don't be surprised if mother blasts off in the future, guys. You think this is something. Your external harmonic targets haven't been hit yet. 24 cents is still very, very possible for this one. Especially if you keep doing this, literally making high lows, high lows, high lows on the daily, right? Grinding up. Shrink supply is running out over time. Oh yeah, that was for Fed, wasn't it? Oh, actually, wait, let's do that. Let's take a look at the market orders. There you go, guys. See, it's no surprises. Like I said, it's a tale as old as time, right? And I love having swap traders as confluence, which is why I love having order flow as a tool I look at when I'm trading. For order flow, I'm looking more mainly at scalping, right? I don't really use it for higher time frame. It's more mainly for confirming higher time frame buys, confirming higher time frame levels, are buys being active there or not, how much valid is this level, things like this. But yeah, again, this is an example of trap traders. People long the breakout, they're being punished. Them covering is going to generate a lot of liquidity. That liquidity is going to go straight into the market makers' bags again, right? That liquidity is exactly what they're going to use to buy their positions up. They're going to have to cover at some point. So that's Mother. Myro still looks good. We had a nice run on this. I'm just waiting for a higher low. I hope we get this red box retest. We might not, but I'm waiting to size up on this one now. Because the last lower low that led to a lower high has been taken out. So you're just looking for a high low, right? And then I want to see this zone get taken from Myra up here. This zone right over here. There you go. Ladies looking like Mario was looking before it broke out, right? So again, very easy to manage your risk on this one, guys. Ladies, if you're looking for a meme, you have a completed M shape, you have a completed pad, 0.5, 0.886 basically, right? 2.399. You can easily manage your risk on this one. Eventually, when you flip that 786 of the Gartley, size up, and then you're just running this one up again. So this one looks like Myra before it ran. So DYDX is another one someone put it in the chat. Let's take a look at that one. Right? Are we surprised this ran? We're not. Been talking about this. Even last week's stream, I said, look, position into this one because it's super low risk. So then we are not surprised something like this happened. Right? You had a macro shark, a shark 1.13, a shark 2.24, all lining up in this general area. Right? So when we were looking at it, we've been looking at it for 2 weeks now. So the last time we looked at this was last week. When did I do my stream last week? It would have been 15th, right? So if we go to the 15th,
right over here. Right, so we looked at it over here and we said, look, this is currently SFPing. If this SFP holds, then just wait until we go down again and you see buy stepping into buy, right? Which is what we got literally over the next 2 days, right over here. And then we got the big pump after that. So you've taken out your shark 2.24. Locally speaking, yes, you've shifted trend, right? Your last lower high that led to a lower low, that's been rated. You're just waiting for a higher low. Somewhere, literally at the zone you're currently in, is a great place for a high low to come in, right over here. Should this be where buyers are interested? If not, then you could go a bit deeper. It doesn't really matter. Go a bit deeper. But you are now looking for longs on DYDX. Okay, you are not going to be sitting here trying to short this or something like this. You are actively going to be looking for longs. When you see a long opportunity, you take it. You've literally got confirmation of the last lower high that led to the lower low being taken out. Right. If you see the higher low now, that is your first sign you've gone from the sell side to the buy side. Right, from the left side of the V to the right side of the V. So we do not just fade these structures. But yeah, there's loads, right, guys? And one I want to leave you guys with today, right? As a reward for whoever stuck around to hear me rambling on for this long. Actually, let's go over Storage before we do this, because Storage now coming down to the retest areas right over here. 87% move up on this, guys, right? And the reason I gave this was because look at this, look at the structure that we had presented to us. We had a shark, we had an M shape, we had demand from history, we were at range lows, right? That was lining up with the actual fib ratios were lining up with key support resistances, right? All of this, and at these lows, buyers were stepping in. We were seeing locally high lows being put in over time, grinding up, grinding up, grinding up, which is why we took this from this particular point in time. And then we've got an 87% move off that top, right? So this was an outperformer. I've been stopped out for my last size up. So my last size up put me at like 0.54 average or something like this, right? I've been 0.56, one or the other. So I've been stopped out. I'm looking to re-enter, right? So far, I've secured about 6K on this, right? And the move's just begun. We've got this much to go, right? So I'm looking to size up even heavier now, recompound those profits. I'm going to be putting that back in. If buyers decide this is the low, this is going to be it. I'm personally waiting for a 3-day confirmation, right? 1 day and 9 hours left. But yeah, if this one holds, so be it. I might just layer in after the 3. I might layer in here the daily closes. I'll see later. But as long as we don't lose these two gray boxes, right? As long as we make a high low somewhere within these two gray boxes, we are fine, right? You're flipping what was once resistance into support. Preferably this one, but it doesn't matter if you wick as low as this. I'll just DCA some, right? The trend has been shifted. The last lower low that led to a lower high has been taken out. Again, we're just waiting for a higher low. After the higher low gets put in, well, don't be surprised if we go and go between A and C somewhere, right? 1.15 is a very, very valid target for this coin. Storage outperformer. So if you now look at what I was going to show you guys is I was going to show you this. Okay, so we know that Total DeFi has been looking amazing. I said this last week as well. So I'm currently building out a DeFi list, right? Just going through, filtering out what looks good, what doesn't, right? Many of these I've already called in my Harmonix video anyway. AVAX, Link, Uni, Stacks, Injective, Phantom, Rune, GRT, ENA, right? All of these I've already called. We've already looked at these and got entries on these, right? And there's still areas where you can manage your risk very, very well. The one I'm interested in, however, is now, okay, word of warning, this is a absolute shit coin. If you're new to the cycle, you probably never even heard about this. Sorry, if you're new to the crypto space, you probably haven't even heard about this token. If you're not new to the crypto space, you might have heard about this token. It might have been in your port at one point. I'm talking about Viet. Who remembers Viet? Give me a show of hands. Does anyone in this server recognize Viet as an actual token? Yeah? Yeah. Yeah, right. You recognize the concludes, bro. Yeah. Okay, so this is an old token, right? This is an old token. If you go to the weekly chart, it looks absolutely disgusting, right? But what I'm interested in here is the price action we've been displayed from these lows. Okay, so I do have a small bag of this. Okay, literally from down here, because one of my this was back in like 2022, start of 2023ish. One of the server I'm in, AR, someone there was basically telling me, look at Vi. I was just saying, you know what, for the shits and giggles, why don't we get in? I literally, it's not big position size at all at the current
what I currently have, right? Because I've obviously taken loads of profits on the way up, but it's 8,579% up from those lows, right? But me entering here, it was nothing but shits and giggles, right? Look, we're at the lows of the bear market. Fuck it, let's just throw some money in, let's have some fun. But what I'm really interested in is what's the structure we're being presented with now, right? So now we can see we have one wave structure that led to a higher low, right? We have a second wave structure that led to a higher low. If you now consider this to be your last lower high that led to a lower low, right? You have broken that trend to a more local down uptrend, right? So you are uptrending currently over time. Yes, on the weekly, this is absolutely ugly. And it's funny to say it's even uptrending when you see this chart, right? But I'm speaking in terms of just, cycle by cycle, wave structure by wave structure. Your last lower high that led to a lower low has been taken out. You have put a higher low in, another higher low has been put in, right? And you're now currently at an area where, if you're speaking in terms of, again, completed wave structures, you have an M shape. You have a 524, an 881 so far, and a 1.9, right? This is a macro bat, right? From your lows, from your macro low, you know have an 886. Your PRZ is lining up with what used to be a demand zone. Used to be a demand zone, an area where you expect bullish liquidity to come in. You violated that before going up, and now you're reconfirming it to be support, right? So even though it's no longer a liquidity pocket, I'm still taking the fact that it used to be a liquidity pocket to now base my price action analysis around, right? So we have Viet, where we have a demand zone on the weekly, right? That is once again an area where buyers are stepping in. Even before that, we have another demand zone right up here, right? Impulse, consolidate, impulse up. And that has also led to another demand zone being created here. But the reason I've not just marked this out solely is because I just wanted to mark this out. So you can see this demand zone led to the creation of another demand zone, which has not been tested yet, right? So we have this big zone where you could say, you'd be interested in buying Viet in this area should the buyers step in, right? If we now go to the log chart for this, right? We go to the log chart and I go over here and I go to DeFi, to Viet. The log chart looks even better, right? Because if you now go to log, I put the log fibs down, right? Just a simple fib retracement. What have we done? We've topped out swing failure pattern at the 61866 golden pocket, right? The low we're holding is the 382 retest on log, right? The 382 has been retested. More than that, you can conceptualize the current trend very, very easily on log within this parallel channel. You're at the lows of the parallel channel. One of the simplest things you could do right now is buy Viet here and say, if you ever close below the parallel channel, you're cutting. Risk management, even though it's a shit coin, right? Risk management couldn't actually be easier. And that's the beautiful. Again, this is why I say I don't focus on how high could a coin go. I focus on how easy is it to manage your risk. Because if you're wrong about this coin here, you're going to know very, very fast. You don't have to wait for a 40% downside before cutting. As soon as you close below this black line, right, and you're really jumpy, you can just cut your entire position straight away, right? If you want to ladder in now, you have, for example, entry at CMP, and then you could cut and wait for this zone to hit, or you could ladder in more slowly and then have a DCA down for this range, and again, a DCA for if the local trend gets reversed, like I've been mentioning, right? But Viet, in terms of purely in terms of technical analysis, right, where we are, is a very, very interesting project to me right now, right? So again, big word of warning, if you already have a serious portfolio, if you don't even need to consider this, right? I'm just showing a potential, a coin that is easy to manage your risk around, right? That's all I'm doing here. You would not go all in on this. You would, it always shits me up, Jesus Christ. That's just the hourly reports on what's been liquidated and whatnot. But it's always a jump scare. But yeah, so this is Viet. So let me now go back to Discord, make sure there's no questions. Am I muted? Yes, I am. Okay. Can you hear me now? Yeah. Okay. Great. How long have I been muted for? Like a minute. Okay. You did you guys hear everything about Viet, right? Oh, okay. Great. 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 Yeah. Sound. Yeah. Okay. um. But yeah, in terms of risk management, that's it, right? So if some of you did want to enter this, do so with a small bag. Please do not go putting your entire life savings into a shit coin. But risk management is super, super easy, right? The easiest way to do this is to go on log, draw this parallel channel now, and just say if you ever lose this uptrending black line, you're just gonna cut your position. right? But as long as you're above this gray zone now, I think, any sort of chop like this is viable, right? You could try and absorb this chop by laddering in, or you could go slightly bigger position size and just cut as soon as this black line is lost. Either way, your risk management is super, super easy at these levels. And we are not going to be surprised then always should something like this happen again, right? We're not going to be. So yeah, just one that, into the wrong SE. Yeah, bro, if I only hadn't rotated to Harry Potter, Sonic, Obama, Emu, man, I could be retired. But it's what it is. You know, that's the thing with meme coins, man. I'm really terrible at finding out what meme's gonna pop off. You give me TA to do on a meme coin, sure, right? I'm confident in doing that. But actually knowing what meme coin to enter in the first place, shit like this, bro, that's a completely different, you know, that's a completely different sport. Yeah, I just, I'm not very knowledgeable on all that stuff. I used to do meme coin trading a bit when Bonk first came out, right? Back in the pits of the bear market, I was trading shit like all the random dog coins that were popping up on Sol, right? Because obviously Bonk was the first. You had like Chili and all these random tokens, bro. Oh my days, those were the trenches. You go into every one of these meme coin tokens. There's racial wars going on. Everyone's being mean to each other. Yeah, man, the good old days, bro. A lot of positive energy around nowadays compared to then. Yeah. But yeah, so looking at that, apart from that, many of these we've already gone over in our harmonics video, right? But if there's a particular coin you want me to look at in terms of DeFi, just tag me in chat and I can look at it, right? GRT being another one, right? This is on log, but if you actually GRT, we made good money on this in 2023. All this in Unity, amongst other servers. So if you look back at where we are now, we're literally back at these lows, right? We called this entire move up. And we did that based off of a weekly bullish divergence confirmation, right? And you remember this very, very vividly. We were saying over here, if the weekly bullish divergence gets confirmed, right? Lower high was happening in price, higher high, what was happening in the RSI, just get in. Many people didn't because they didn't understand what I was trying to say. But hopefully you guys do now, right? The bullish divergence got confirmed on the weekly. We entered, I remember strictly being in the back of a tuk-tuk in Thailand. This is still in my channel, I believe, taking profits on this as it was going absolutely crazy. But yeah, so again, we've now come to a stage in GRT where you have a 786, right? You have a 786, you have a 618. It's a godly. You have a completed M shape. The 786 has been validated. So, it's just a matter of time now. It's very easy for you to manage your risk over here, right? It's just a matter of time before this picks up steam and it goes higher, in my opinion. So yeah, GRT is one, right? ENA is another one. We've already looked at this. Completed M shape. You have a bat, an 886. You have the left shoulder head, right shoulder kind of structure. You're retesting your neckline as we speak, right over here. So if this retest ends up successful, then you could actually, if you haven't entered at these lows, you could very easily enter over here, right? If this doesn't hold, then we have all these zones we could bounce from. So it's just a matter of where do we end up going. I do need to clean this chart up a bit actually. So let's take a look. Let me delete this. Let me delete this. So that zone stays. In terms of the weekly first, what do we have? In case of a pullback, we have this zone here. So somewhere around here is where I look for the high low. There you go. If you lose this, you're saying back towards here we go. There. So now I have this updated zone at the bottom. You know what? Let me draw this in yellow. So I'm just looking for a size up on this because again, the last lower high that led to a low low has been taken out now. So just waiting for a high low confirmation, right? But yeah, so a lot of good coins. MKR, the 76 did get hit, the godly, but we are currently below it, right? So that's why I say wait for price action confirmation. Price action confirmation did not give you any sign buyers will step in here. Okay, look, you closed below. Even on the daily, you had one close above the 1.61786 area. As soon as you got within the zone, you closed below, right? So if you keep going down from here, maybe we get blessed with $904 MKR. Who knows, right? Maybe we get the 886 on the bat next. It'd be amazing if we did. We don't have to, right? We could come down here, do something like this, for example. But basically, what I'm going to enter is either if we now get the 886 or to stop out all of this external liquidity as well, all right? Or we go and reclaim that 1.618786 area back into support. If we do that, then, entry on MKR, and then you have your T1, your B, your C, and your D, your T2, right? As your targets to take profit on this coin. This I looked at that from I got it off Coin Market Cap, Crusade, bro. So you go on Coin Market Cap, they've got these lists of everything. Because I don't know like what different coins are, overly speaking. But they've got a DeFi list and GRT was under that. So I literally just copied that list. Yeah, there's loads of coins. I'm just putting in like the first 2 or 3 pages. So that should include all the, better meme coins and better shit coins, sorry, and then your actual high caps. Yeah, SPX 6900 went absolutely crazy. And again, if people say fibs don't work, actually, because I know there's loads of people that say fibs don't work. How come if I go on my master list right now and I was to go on SPX right over here, if you take a look at SPX, why is it topping up where it currently is? Look, you put a trend basis extension down on the log fib based on your weekly uptrend. Hey, fibs don't work, but guess where people are being active? Guess where they were originally active? The 0.5. After that, where? The liquidity rate of the golden pocket. Right? It's not a surprise, is it? That wick down to the 618. This isn't me fitting data, right? This is a trend basis extension you could have put down as soon as you suspected this to be a range low, right? Low, high, high, low. Everything else is literally just reactionary. No data fitting inside. We're just watching how does price action develop around these ratios now. We're saying if this holds a support, we're not going to be surprised if this thing literally one day can go. This thing can go to $4.89 to $9.58. It genuinely can. Right? Because now above the 70707, of course, you have the 76476, right? $1.80 to 221. But above that zone, should you ever get above, right? $4.89 to $5.60 is where your next major resistance is. So you're not going to be surprised if it gets there in the future. And that's not me saying buy right now because it's going to go there. But we're saying if it did go there, then you know why price is going to react to this area. It's not going to be coincidence. We already have pre-calculated levels at these areas. But anyway, so if we go back to focus, let's quickly look at Bitcoin. Let's see what's happening. Oh, this is log. I'm not going to scare you guys. This is my scalping setup. One sec. There we go. We are currently at the 1.05, 67,208. We're bouncing off. Nice. If we go to the actual Bitcoin chart here, there's something more stream friendly for you guys. There we go. Yeah, still nothing much has happened, right? It's just near Tuesday. So any deeper reaches into the zone would be welcome from me, not needed. So yeah, let's see how this goes, shall we? Oh yeah, guys, anyway, let me quickly check the chat. LDO, yeah, sure. Okay, I'll look at one last coin. I'll look at LDO and then I'll call it a day there. Let's take a look at LDO. LDAO USDT. One of the core setups. Why? You have I'm going to call this a bad try. I know it's not exact 886, but it's damn more close enough. And I've also taken the actual macro wick, right? That's also why it's not a perfect 886. We've already got off 58% from this. You're still within the demand zone. The mid of the demand zone, 2 weeks, you reclaimed as support. Right now, I would say you have no entry on LDO unless you're going spots and you're okay DCing down to the lower bottom of this zone, right? Either you wait for this, flip this into support, right? Or you wait for a raid of all this liquidity that's being built up over here, right? Because again, what this showcases you is there's long after long after long after long, longs piling up. Perhaps we get a raid of those before we go higher. So 2 situations, you're either long the flip of the 2 week demand zone into support, right? So the 2 week demand zone is right over there. If you go to the 2 weeks, it becomes very clear why I marked that out, right? Right over here, 2 week demand zone. Either you flip that into support, and it's easier to see why we need this area flip, because just above that is the resistance, right? Just there. So we need a confirmation that buys have got a base to go off of, right? So for now, we keep rejecting off this area. So you either get something like this, right? A flip of this general zone, either the yellow or deep down to the green into support, or you get a raid, flush out some of these longs, and then the reclaim of the mid, so on and so forth, is where you would start again sizing up for LDO. Definitely areas where you want exposure, okay? Because it's easy to manage risk. But again, if you missed our bottom entry, managing a risk here was much easier than it is up here now, right? Because we're still up like, from this low where we actually looked at it, we are currently up 30% still. So you need to be okay with holding 30% of a drawdown, not withholding, but actually maintaining your position size so that a 30% drawdown doesn't mean much to you. It takes some management on your part if you wanted to get in. But on the macro, look, you have an M shape, you're at areas where it matters. If you ever lose this zone, then I would expect LDO to go between 64 cents to 40 cents. But if you never lose this zone, then this is where you would expect LDO to bottom out before again, showing some reversal structure and then going higher. So this right here is LDO. What oscillator am I using? Oscillator wise, I normally use the RSI for my traditional candlesticks. For my order flow, I traditionally use the CVD for my oscillator. It's not really like an oscillator, but you can treat it like one because you can do divergences of them. But RSI and MACD, I recommend those two above anything else in terms of oscillators. Your relative strength index and your moving average convergence divergence. But anyway, guys, this was everything I wanted to go over today. I don't know if I've forgotten something. I probably have. If I have, I will just update it as it goes along. Right? Rio, again, we got a nice reaction off that zone again. We looked at this last week. I said, if you want to reload some Rio, it's a good time to do so. From that reload, once again, you are up 26%, right? So we've been killing this coin. But yeah, so if I missed anything, I will, ping you guys in chat or whatnot. But if you guys have any more questions or something like this, reach out to me in DMs or rather ping me in chat, right? Because more likely if I don't know you or I already haven't got contact with you, your DMs are probably going to go to my spam folder anyway. So ping me in chat. If you are more interested in learning how I trade, you're more interested in learning how I do my traditional analysis, order flow, anything like this, feel free to reach out to me in chat. We can talk about it there. Feel free to DM me, right? If you're interested in learning the way I trade. But apart from that, catch me on my YouTube videos weekly on my streams. If something hectic happens, I'll try to do another stream again this week. But otherwise, I'll be here next Tuesday again probably. But thank you guys very much, right, for your time today. And yeah, Discord does really like to hide those. Yeah, thanks, Rai, brother, for being here. Thanks, Concluse, Duke, a few of my students in here on today's stream. Thanks, Prasadi, brother. Always appreciate you being here. And yeah, just if you need anything, just ping me in chat, right? So I'll catch you guys soon. Bye bye.